This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Managed money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, January 13th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to them during the show. Overnight markets here at March corn down 3.5 to finish at 4.18. March soybeans are down 5 at 10.44, and March Chicago wheat was down 1 3/4 at 509.5. We had a couple export sales announcements here this morning. First one, 168,000 metric tons of soybeans to China. That was for 25. Also announced 152,404 metric tons of soybeans to Mexico, also for 25. What we know this morning, I guess we're still reeling from the report. I guess, Dustin, given that we've now had a little time to digest, certainly work through the numbers, dig into the report a little deeper. What's your takeaway here as we go forward? And then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, obviously not a good report for growers, right? No one wants to see a price drop so dramatically like it did. And there's definitely going to be a lot of pain out there, it seems like, from what we're hearing. So some silver linings, right? PLC and Arc County are still very active for last year. So the lower the price goes, every month that buyer's survey is going to probably come in at lower prices. And in theory, it should be triggering larger payments if you haven't already maxed out your cap. With the projected payment as of right now, that payment could or should be growing for this upcoming payment, October 2026. I think there is probably extra light being shed on just like the pain, of growers right now, financial pain in Congress. I wouldn't be surprised to see and hear more, similar type of things that we saw last year in that 11th hour bill last year. So we'll see. I think, this just highlights the importance of, how important the Jan reports are. At the end of the day, it was, 350 million bushel increase to expectations, which is not that far outside of the realm. All the other stuff is kind of noise to me, right? The increase in harvested acres, the increase in yield. I think we want to remind ourselves that the real number is the measured count of stocks on December 1st. And everything else kind of has to fit that, right? What was the yield to get to that point? Was the harvested acres to get to that point? What was demand? I think the interesting part about demand is we had a huge disappearance from exports during that time frame. And the suggestion that feed numbers are going to be up, as much as they're suggesting in the WASDE report. I think that's going to be the hard one for me. I think prices need to probably go a little bit lower right now with this type of a data and try to encourage that demand to grow. But it does seem like it's going to be a bit of a hard path to get through that.
Justin, we looked at the breakdowns. I mean, they did lower Illinois, Iowa, but the West carried us. And I think we were always looking towards that throughout the season from both anecdotally, but then also what they were telling us. So I guess, what are your thoughts here this morning?
Yeah. I think that's been the tough part for a lot of people all year. Where you looked at all the acres, the big growth was out in non-traditional areas. And we're so used to looking at Illinois and Illinois and Iowa. And if they're not a brand new record, it's impossible for the nation to be a record. And I think that's been the narrative since, September, October. I think a lot of people just stuck to that, and say the USDA has to be lying. You can still argue that they're off, whatever. But I think, people, when you look at the math of, Kansas and Nebraska and Dakotas and all these areas that you're not used to carrying a national average, it wasn't them blowing the top off like we're used to Illinois and Iowa doing when we have a record. It's those extreme low numbers coming up. dryland corn yields being really good, and all those kinds of things that added up to a pretty big crop. See Illinois and Indiana, or sorry, Illinois, Iowa. I think Indiana actually came down a little bit. All come down, and the rest of the call it fringe outside the ice states going up to get that number. I think is the hard part for people to reconcile. If we talk about where we see stockpiles of corn, it's big stockpiles out west. It's in all these areas where you see basis levels 50, 60, 70 under. So I think, like I said, I think that was the hard part for people to reconcile is, we know some guys in Illinois that are off 30 bushels and guys in Iowa, and, it looks like they are a decent amount off a record. So again, it's so many data points that for any individual to try to go around, and even if you have 1,000 clients, it's still such a small data set to try to get, what the national yield is. So the number is what it is at this point. I think to Dustin's earlier point on the January report, but even on a bigger scale, that's why you just can't rely on these kind of things for your marketing plan. I mean, because there's always something that comes up, and complaining and whining about it is not going to get you anywhere. So I think you just kind of have to look at, okay, well, here's the numbers. Where do I sit? What's my biggest risk? To Dustin's point, like, sharpen the pencil on PLC, Art County. Probably start thinking about crop insurance for next year. It's going to be a tough battle, but you gotta be pretty diligent on it.
And to that point, Justin, I think you're going to have a real open mind on getting creative for next year, it appears, for crop insurance, right? I think you're not going to be able to just put yourself in a box. I think you're going to have to look at everything and analyze everything and see where you got to be.
Yeah, it's just, these are tough markets. I mean, it takes time to come out of, when you have surpluses, especially in the world. And so try to look at it, we were at, 380, nearby corn prices got up to 450, 460. That's a really big rally. And a lot of people had really big yields and didn't sell any corn. And crop insurance expired, right? So we talked about this a lot. When the biggest risk is between when one crop insurance expires in October and you buy the next policy in March. And, that's the biggest risk, because you're uncovered in that time frame on 2 crop years if you're storing, last year's corn, for example. So I think that's the biggest risk in corn here, is now that you don't have, anything friendly enough for investment money or big money to come in and prop prices higher. They're probably going more on the sell side now. And you're sitting on a lot of physical bushels of corn with the next crop kind of coming around the corner. I just think there's a lot of pressure above the market here on any kind of rallies.
Yeah, I did want to make another point too on this, Dan, on the report itself, because there's the initial reaction is the USDA is lying, right? Like, that's what Justin just said. But like, one of the first questions I think was that a lot of people have is like, how are the acres changing? They really didn't change acres by much. They changed harvested acres, right? Which is, a lot of that is a suggestion on how, explaining how all these stocks were counted in these areas, right? That there's less abandonment. And everyone's like, well, how can there be such a big difference from the June survey to the final acreage number? We found that out in August and September, and right through the November reports. They were using FSA data. The acreage the large acreage increase happened shortly after the June stocks number in the August WASDE report on actual FSA data. And you have to argue that like adherence to that is growing because we're obviously surviving on government payments recently. And I think the government's gotten pretty good at using that data, the actual official data they're getting, rather than a grower survey that's getting less and less participation every year. So like, for anyone to argue that the June survey is a more accurate number than the certified FSA acres, I think it's silly. So I think that the acreage number was already known, and the writing was kind of on the wall coming into this report that there's a possibility it could be a bearish report. I think we talked about this quite a bit. So I don't know. I that's why I worry a little bit, is the initial reaction is so negative. It just shows that there's still a very large long position that needs to come out of the market in the next couple of months. So I'm kind of worried about what that could mean for price action.
Sure. Ben, share a few thoughts here.
Yeah, the one thing looking at yesterday that sticks out is tremendous volume. And you probably had a lot of people leaning to the upside, looking at there's no way, quote unquote, that they can't lower yield a little bit with the finish that we had, doing great demand. And that all came out and pretty quickly. There really wasn't there was the one bracket where we traded 15 lower and we didn't trade it again. So it left a little bit of repair work on the profile, but I'm in the same camp as Justin Dustin. This is probably a sell rallies market until that changes. And I think there was a massive amount of just get me out trade, but that wasn't necessarily truly reflected in massive open interest changes. So maybe a change of ownership. We'll see. If addressing the people being upset about the report and the data, et cetera, if they're wrong, the market will figure it out. And if they're not, it's what you have to work with today. The one thing that I think is a real concern is heading into the last half of February into March 1st notice day, right? Growers are going to have to generate cash. There's probably been a lot of deliveries on basis contracts, which kept offers off the market. And that's traditionally when you have to pay the piper a little bit. So concern for new crop corn insurance levels. See if we can stabilize in here. We're not sitting too far off the March contract lows, believe it or not, this morning, 8 cents above that. So I think that becomes a pretty critical point. Typically, when you make a new contract low or high, you can count on a 2 to 3 cent added on to that. So just watch this morning. Good to see soybean sales, but we need some supply disruption in the world, right? We've had back to back record crops in both hemispheres, and we need to do something to shake this up a little bit. So we'll see. I think there's going to be a big onus on renewals at these prices, on loan renewals. So there's a lot, I think, that's going to happen in the next 45 to 90 days that could be pretty interesting.
Very good. Got a couple minutes here. We'll go over Ryland. Obviously, feeders yesterday on the back end of the grain report were pretty strong. Kind of an ugly trade and ugly close, for the hogs, finishing below the 20-day there. So I guess maybe share a few thoughts here as we start the day.
Yeah, I think we did get that little feeder pop just because corn was down so much. But on the other hand, we did see a little bit of light live trade yesterday in Kansas. So obviously pretty small here, just steady trade, 233. We did see Choice and Select still kind of creep up here. Select actually overtaking Choice as far as price here. So it's a little bit, a little bit abnormal. I haven't seen that in a couple of years, and not exactly sure what it means. Just seems like that demand for Select is definitely creeping up here pretty good. But in general, there wasn't a ton of surprises here on the USDA report. One of the more important things I think to note was that 2026 beef production was raised, and I think their justification was based on heavier dressed weights. They stated that will offset reduced fed cattle slaughter in the second half of the year. So I think that's something interesting. I think that puts more emphasis on weights, just kind of being the kind of bailout factor, as well as increased beef imports. They raised imports by 75 million pounds. So, I mean, at this rate, it doesn't seem like we're really having a beef shortage. It still just seems like it's a cattle shortage as far as head numbers, but we're still going to have production overall just slightly uptick. I think from last year, just based on that alone. So I think that's a really important factor and something that we're going to have to keep eyeballing further out. And then, on the hog side of things, definitely kind of took back everything that we'd had for the past couple of days here. The report definitely had a little bit of a negative tilt to it. Just it kind of felt like factoring in some of the larger hog and pig data, and the 740 million pound upward revision from the 2026 pork production estimate, I think just overall just says we're not going to have any kind of shortage of pork this year either. So, I mean, you can take that in the spirits which is intended. Obviously, there's going to be a lot of back and forth about the USDA credibility, but definitely kind of leads this longer term kind of bearish sense, I think, over the market, at least for the time being. But on the fundamental side, carcass was up 78, bellies are up 74. I mean, we're still seeing that carcass really start to hold on, while on the other hand, cash prices weren't reported yesterday, and just overall still need to see that cash movement, I think, or at least some kind of strength in cash really to kind of keep feeding the bull here. So I think that's why we're taking quite a bit out yesterday. So overall, could see another kind of back and forth trade here. Wouldn't be surprised to see a little bit of a bounce early on.
Appreciate the update. Thanks, Rye. Just came into the open here. We got March corn down 4 cents now. 417.5 is the last. March soybeans are down 4 1/4 at 10.44 3/4, and March Chicago wheat's down 3 1/2 at 5.07 3/4. Yesterday we announced the War Room Report, a new daily subscription to all things AgYield and our daily commentaries there. It'll have premium video content, especially revolving around crop insurance. So be sure to check that out. The link to sign up is in the description. So again, we appreciate everybody that tunes in on a daily basis. Throw us a like and subscribe. Yeah, thanks for supporting the show every day. We enjoy putting it out for you. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.